And thank you, Isabel. So let's just get started, and anybody else is welcome to join us at any time. So first, I'll start with an introduction. My name is Madison with the Chesapeake Agriculture Innovation Center, and I'd like to give a moment to introduce the cake team here, Chelsea, Isabel, and I think I saw Emiliano as well. So Chelsea and Isabel, if you'd like to introduce yourselves, and then we'll move on to our guest speakers for this evening.
Hi, everybody. Great to see you here. I already know a lot of you from courses and around Cake, but my name is Chelsea, and I'm the new program director here at Cake. Previously was teaching the courses, so some of you might know me from that, but I'm really excited to be in this new role and helping to support Cake as an organization. And if you don't know about Cake, Cake is a nonprofit, and we support farmers in the Delaware, Maryland, and Virginia region with specifically right now we're focused on developing value-added products and helping farmers increase their sales. And yeah, we offer great programs like this thanks to people like Madison. So thank you so much.
Thanks. And Isabel or Emiliano, if you're available.
I'm here. Hi, how's everyone? Isabel, you might heard from me a lot. I'm the one that sends all the reminders and basically bugs you with messages. But yeah, I'm here to serve as a support system for you in Cake, making sure that you have access. If you are in a course, you have access to all your materials on Agribusiness Hub, and that you get all the support you need, and also that you can attend these very useful events and webinars that we are hosting each month.
Thanks, Isabel. Emiliano?
I'll just be brief. Hello, everybody. My name is Emiliano Espinosa. I'm very excited to see so many people in this webinar. They're always very popular, and Madison does a great job hosting them. So yeah, really good stuff. We're actually going through a transition process where Chelsea is now the new director at the Chesapeake Ag Innovation Center, and I've been running the organization for the last 4 years, but I am stepping down to allow her to continue leading the organization. I will continue doing bookkeeping services for farmers. Actually, I noticed that was one of the biggest challenges that farmers deal with throughout this 4 years I've been doing this, and so I will be focusing on that, and will be supporting Chelsea and the team in the new stages that will be informing all of you soon what's happening next. So thank you, Madison.
Awesome. Thanks, Emiliano. Nice to see you. So for this evening, our guest speakers are Rachel and Ellie with Horizon Farm Credit, and they're here to tell us about farm finance, a very big topic, what lenders look for, and how we as farmers can be preparing. Some housekeeping things I'll mention at the end of this webinar. We'll be sending an email with the recording, with the slides, with maybe some additional follow-up information. So you can all expect to receive that email. And during this webinar, Isabel will be sending a link to a worksheet, just a little participation worksheet to help us help understand what you learned and what you might need additional help with. That's the main goal. Sorry, was someone saying something? Okay, no worries. All right, so I'll hand it over to Rachel and Ellie. You can feel free to introduce yourselves, and I'm excited to learn.
Well, good evening, everybody. We're thrilled to join you all this evening, and really happy that Kate gave us some time here to talk to you about farm credit and a little bit of the finance world. So as we go through, please feel free. We'd love for it to be an interactive meeting this evening. So questions can go in the chat as we go, or feel free to unmute yourself and just butt in if you need anything or have any questions. So we're going to talk a little bit about farm credit itself, if any of you are unfamiliar, what we do, but then we'll get into, what are we looking for in our applicants, kind of what do our credit procedures look like within, taking a look at an application for loan approval, a little bit about credit score since that is important, and then we'll do some case studies at the end, mock loan scenarios to give you an idea of what's approvable and what needs more time in our eyes, as we like to say. So to start us off, my name is Ellie Grossnickle. I am an ag relationship manager in Frederick, Maryland. I was working with young and beginning farmers exclusively. What Rachel does, she will tell you a little bit more about her role, but had the opportunity to be a loan officer in my home county, which was hard to pass up. So I am back there now working in Frederick and Montgomery counties, working with full-time and part-time farmers of all types.
Hi, everyone. My name is Rachel Eck. I am a YBS relationship manager. YBS stands for Young, Beginning, and Small relationship manager. So I work with anyone that's looking to get into farming, maybe transition from part-time to full-time. Really has that growth mindset and very, very ambitious, and any kind of startup, anything with that. So I help them on their journey from that's help get them started, whether it's providing those resources, providing that attention to detail, and just helping them along their journey. So I've been with Farm Credit for 4 years. I'm based out of Denton, Maryland, and I service majority of Delmarva. So that's all of Eastern Shore, Maryland, and then the Eastern Shore, Virginia. Maryland, Delaware, and then Eastern Shore, Virginia. So excited to be here to talk to you all.
So getting into a little bit about farm credit. Rachel, if you want to advance there. So Horizon Farm Credit itself, you'll see in this map to the right, this is the territory that we cover. So Pennsylvania, majority of Maryland, we are missing some of the southern and far western counties, Delaware, and then some counties in Virginia and West Virginia. So that is Horizon Farm Credit's reach. And what we do is primarily ag lending. That's our bread and butter. So the more farmy it is, the happier we are to be lending on it. We do offer some other products and services that I'll get into. But we were chartered for ag lending, and that was over 100 years ago. Congress decided, you know what, farm credit or farmers need a dependable source of credit. As you guys know, either as you're currently farming or looking to get into farming, it is an extremely capital intensive venture. Typically, it's very hard to secure ag real estate because of the cost. And then once you get into it, your markets are super volatile. So that's kind of why farm credit was developed as a source of dependable credit for strictly farmers. We do work with part-time farmers, W-2 earners, rural home owners, but again, kind of farming is what we do. I think that this slide is actually a bit out of date. I think by now about half of the United States credit needs are met by farm credit. And this Horizon piece that we mentioned, that map you see is one of 50 some farm credits across the nation. So if you are watching this evening and you're not from a county listed on that map, no worries. There likely is a farm credit to work with you. So you can look them up on farmcreditfinder.com and you'll see them there. A little bit about what makes farm credit different is that we are cooperative. So I think that that's a huge advantage for people that work with us. Essentially, anybody that borrows money with us in turn becomes a member of our company. At closing, you pay a small stock fee, and that in turn makes you eligible, one, to receive patronage dividends, which is like a refund on your interest rate, but two, another big one, to get voting rights within farm credit. So you as a borrower are who is electing our board of directors. And that board is made up of farmers within the territory that kind of guide the direction of farm credit. They're actually why we've had such a huge focus on young and beginning farmers in the past year, is because our board directed we have more programs and more roles that are, kind of tailored to suit their needs. So cool little piece there. One other great thing about farm credit is we like to call ourselves the experts in ag lending. So many of us come from ag backgrounds. I grew up on a dairy farm. Rachel their family has, is it poultry and grain, Rachel, and hydroponics? So she's involved in agriculture, but so much of our staff either comes from a farm or continues to work on a farm. So when we talk to you as applicants and read over your applications, we generally can relate to kind of what you're projecting. And if we can't, we know somebody within our company that can. And then the next piece, just to highlight what we offer, like I say, anything farm related is likely eligible for us. I'll get into eligibility in a little bit, but real estate, equipment, livestock, operating loans, they're all things that we see on the daily. We also have a lease program. We offer crop insurances, livestock insurances. And then we even get into that rural living side. We'll fund lot purchases, home construction, home purchases in the country. So we get into the rural living side a little bit. And then one really cool thing that we added on within the past, I want to say 2 years, is our business services department. So this department is made up of a team of consultants that focus on business planning, feasibility studies, transition planning, kind of you name it in regards to starting a business or analyzing where your current business stands. This is a feed service that we offer. So something to know is that there is a fee associated. And then 2 other things that we have is our accounting and taxes department. So we have on staff accountants that will prepare your farm records for you, or your year-end financial taxes for you. So a little bit about farm credit. Then I think.
Okay, yep, this is me now. Sorry, my mouse went sideways. So like Ellie mentioned, we do offer beginning farmer loans. We understand that this, the board understands that this is important, important part of the farm credit mission. So we have a program called the Grow Ahead program, and it is a unique program designedly dedicated to support young and beginning farmers, whether that be in terms of financing or any other terms of support, such as educational resources, and we do have grants available. And with that, just wanted to highlight some of the great benefits of the Grow Ahead program. We have more relaxed underwriting requirements. When we go to look at underwrite a loan, we will review certain financial metrics such as debt coverage, cash flow. We'll look at a variety of metrics to make sure it works. So we understand that some of those can be difficult for someone who's looking to get started into farming. In addition, we have very customized loan terms. We try to work around what would help the prospect. If you're planning to get income coming in at a certain time of the year, especially when a lot of our grain farmers, then we can move payments to have an annual payment, meaning that it would be due one time a year. In addition, we offer discount pricing and reduced fees, which is really great. We also collaborate with the Farm Service Agency. We have a good working relationship with them to make sure. A lot of times we will go in with joint financing to have both parties present to help make the loan work. In addition, Ellie had mentioned at the beginning that since we are cooperative, our borrowers do receive patronage, that return of investment for the amount of interest that you pay into your loan. So being part of the Grow Ahead program, you are eligible to receive that patronage and then additional resources available. So here are the additional resources. We have 2 types of educational programs that you all can join and be a part of. The first level would be the Ag Biz Basics, and that is a very self-paced online course, very short term. Self-paced, it doesn't cost anything to be enrolled, and something that you can join any point in time. We could get your contact information and get you signed up by tomorrow. It's that easy. And then our second program is called our Ag Biz Master. So this is going to be a little more in depth, a little more interactive. It has an online component, an online coursework component, as well as several webinars throughout 2 years. And with that, registration is opening up soon, October 20th, I believe. So you can either go to our website to sign up to get on the list, or I would be happy to take your information and get on the list. There is a fee for that, but if you do complete all the coursework, then at the end of that 2-year successful completion, then you will be reimbursed for the fee. So this is also really great, especially if you think that you might be looking for financing with the Farm Service Agency. They do have one counter, if you have to be eligible for that, they do look for an educational piece requirement, and this can help satisfy one of those requirements. And then in addition, we do offer 2 amazing grants, one being called Jumpstart and the second being called Farmers on the Rise. And both of them serve to help young and beginning farmers. Just each one of them, it has a little specifics in regard to how many years that you have been farming or beginning your farm operation. Jumpstart is geared towards if you have 2 years or less of farming experience, whereas Farmers on the Rise is 3 years or more, up to 10 years of farming experience. So with that, there is a selection criteria, application, financial information to input, and everything with that. So if you have questions about that, we're happy to get you on our list for when they are available the next go round.
All right, so that's the general overview of farm credit. Now we're going to get into a little bit of the nitty gritty here with perspectives of meeting with a lender. So if Rachel and I had to put our heads together and, curate the perfect applicant, these are some things that we're looking for. Not that we could ever deny you based on any of these things, but makes the long-term lasting relationship a lot easier if we start off on the right foot. So when it comes to getting a loan in this section, we're going to look at what does my lender look for from me in terms of, we'd like to say you on kind of a individual basis. So that could be, your communication styles, your responsiveness, how we're interacting with you before and after closing, because it is a long-term relationship that we have with all of our borrowers. And then also, what are we looking for in an application? That's more so the numbers, the financial analysis that we're going to put together and say, are they meeting these ratios? If not, what's the reason? And is that something that we can adjust in our financial projections? So it's important to start off that it's a 2-lane relationship, mutually beneficial here at Farm Credit. So, I indicated that we refer to ourselves as relationship lenders. So that means that when I close a loan with you, I will be assigned as your loan officer, honestly, from either the time you pay off your loans or I retire, or hopefully, God forbid, would leave Farm Credit. But it is a lasting relationship where I'm your service provider all the way through. So that means that you, for your operation, want to see growth and success. And we want to see that too as your loan officer, because we're going to be the ones working with you in the future. And if there ever is a case of, weakness within the operation or delinquency within, we're working with you through that. So we want to make sure that we're setting you up right from the jump. A couple of things here when I say, 2-lane road, one that comes to mind is changes. So just as you would like to know of any changes on our end, if, say we need to add a co-borrower to the loan, or we need to change collateral and take a lien on something else. Just as well as you would like to know that, we also need to know about changes. So if there's changes on your farm operation where, you're adding a new source of income, you're purchasing more ground, there was a drought this year and it affected your harvest. We need to know those things just so that we can plan accordingly. One of the huge things is having a heads up notice, because it does take us some time in some cases to get things done. So the more advanced notice we have on any changes, the better that we can pivot and find a solution from there. And then another one that comes to mind is challenges. So as you would like to know if there's challenges on our end, take when it comes to analysis and we're struggling to get the numbers to work out, and we sit down with you to say, this is a challenge on our end. What are we not projecting that we need to be? What are we not including in this analysis that might change the picture? We also want to know of challenges that you're facing. So say you lost one of your farmers markets that you go to, and that's going to change your fall season, or you had storm damage and it took out one of your hoop houses. We want to know that too. So it's a lasting relationship in the way that we kind of need to know whatever's happening on the farm, just so that we know how it's going to affect income, or your operation for the next couple of months. So let us know. We are not new to many things around here. Don't be embarrassed to tell us anything, because that just allows us to plan and get a solution going forward.
Yeah, and if I could just add that, working with a lender, right? It's about building that relationship. We understand that this isn't going to be a short-term relationship. We're looking for that long-term relationship to help you be successful.
Okay, and then here, the purpose of your loan. So when you come to Farm Credit, a lot of people like to come and, start the conversation with, well, how much will you lend me? Instead, I think it's important to kind of reframe that into, okay, this is what I'm looking to do. These are the goals that I have. I'm looking at this ballpark number. Do you think that that's somewhere we could get? Because we never just want to lend you all of the money that you qualify or could afford on paper. We've seen in the past can just set you up for failure. So learning why you're requesting the money that you are, what it's going to go toward, will help us, one, determine a loan amount, but also determine what structure the loan needs to be set up on. Thankfully, Farm Credit has a lot of creative structuring ways. So if you're an operation that only gets paid, say, quarterly or annually, we can set up your payment around that structure. Or if you're purchasing property and, have plans to put that property in land preservation, that's something that we would need to know as well, because we can set the loan up to work in your favor. So instead of starting out with, how much can I get? It's more so, this is what I'm requesting funds for, and the amount that I think I'm going to need. And then we can go from there.
So imagine you've just gotten off the call with Ellie and you are meeting with her tomorrow, but she gave you a couple homework items to prepare for. So what are we going to do? We are going to come prepared with everything that we need to discuss with our lender. Now, we understand that you might not have everything figured out, and that's okay. But really being prepared from the get-go, or just having a good foundation, really can help set you up. And really, when you're working with a lender, that really helps us when we're looking at the fine details of your operation, what you want to do, how will you repay the loan, the purpose, and how we can work together to help you with what you want to achieve and be successful. So when we have applicants that want to meet with us or interested in getting a loan, here are some of the basic items that we look for, such as having a government issued ID. We have a balance sheet that we can provide you to fill out, or if you have one, we can work together to complete that. And so with a balance sheet, what we look at is your assets, such as what you have in your checking, savings. Those would be kind of short-term assets, long-term assets, your vehicles, what they might be worth. If you have a property, a residence, what's the value of that? And then on the right-hand side, we would look at the liabilities. If you have a credit card, do you carry a balance? If so, what is that balance? Do you have any other loans? Do you have a mortgage for your home? If so, what's the balance on that? Interest rate, monthly payments. So we'll look at all of that to kind of look at your overall net worth. And then we might request additional projections, especially if you're looking at starting a brand new farm operation. We might ask for projections on your revenue, your expenses. That all ties back to the income statement and your cash flow. And so it's really good to work through some of those metrics that we would look for that can really help us as a cash flow lender. If you have a job, we call it an off the farm job, such as a W-2 income, we might ask for your pay stub. If you're looking for something in the business, we would ask for business entity documents. Again, just giving you a general overview. A lot of this, once you meet with a lender, we'll ask for those additional items after that first initial meeting, but it's just good to just gather some of the key items. And then having your past tax returns, whatever is the most recent, and then at least 3 years. If you have more, that's great. Any projections that we can look at to really help you with what you're looking to do. One thing that I think is really important and is something that as a lender, I find very helpful for someone who is looking to request a loan or start a farm operation is to have a business plan. And generally, the business plan, it looks to outline your business goals and those strategies on how you might achieve to be successful in your business. And with that, you can look at, who's your competitor, what's your overall target. You can include some of those numbers, such as here's my cost of production or cost to make this product. Here's what I might sell it for. And then here's what I might make at the end of the day. So you can include some of those, financial ratios, and then it's something that's really great that you can share with your lender. And that it's always a working document. This can always be changed and updated as you tailor your business to fit your needs and how you can best meet the market. And then in addition, we do offer a business plan template. So I would be happy to share that to Madison and she can email that out afterwards. And it's just a basic blank template overview. But with some of that, it does include the opportunity to add a mission, an overall summary, a SWOT analysis. SWOT stands for strengths, weaknesses, opportunities, and threats to the business, financial metrics, a marketing plan. It's really great if you have this great idea, but how are you going to market to the rest to your consumers and get it out there to help meet that demand. If you have any key advisors, hint, hint, a lender or an accountant, an attorney, maybe you have another a farmer who's a mentor, or thinking of anyone that would be helpful in helping you to be successful, and then a cash flow statement. So happy to provide that resource afterwards.
Okay, so you
Excuse me. I have a question. Would you have a class on how to prepare a business plan?
I know we have a webinar that I can share you a link. But that would be the extent of what we would provide.
on how to prepare a business plan.
Thank you.
Yeah, but it would be more like to what to include.
Yeah, I mean, I would think the programs at Cake might be a good place to start, right, Madison? Because you guys will help with business plan development.
Right now, we are not offering those services at the moment. But yeah, we do have our courses, of course, which I do think go pretty in depth into how to create a business plan. So those are probably the best option at the moment.
Sure. Thanks, Chelsea. We have consultants that help with business planning, but it is, I think we'd mentioned a feed service. So there would be a fee to have somebody work with you. And we like to see that you've kind of prepared some sort of plan yourself, just so that we're not building from scratch. We like to see that you've kind of thought through what you'd like to do and have done some of your own research before we get one of our consultants involved.
I would recommend to reach out to the small business development in your area. They would be a good starting point to see if they would be able to help, or they might be able to recommend someone else.
Yeah, that's very true, Rachel. So you sat down with Rachel. She collected all your financials. We're going to keep this picture going. I like the visionary. And we got a loan application. So the 5 C's of credit are essentially what our underwriting team is looking at to say, yes, this is a loan we want to make, or it needs more time. We never like to say, outright no. Typically the response is fix these items and then come back to us once they're resolved. And at that point, we might be able to approve an application from there. So just going a little bit into the 5 C's, the first piece that is not really financially tied is character. So this is, who you are as an individual. We obviously can't make too many assumptions, but your credit report is kind of a good indicator of decisions that you've made in the past. So a credit report, which Rachel is going to get into here in a little bit, is basically a snapshot of the past 7 years of your financial decisions. It shows how you've performed on your previous loans. Have you been paying late? Have you gone into a bankruptcy? Or have you really made it a priority to pay your lenders? And, what score do you have to reflect that? So we realize that credit scores can be low for various reasons, and there are exceptions within. But that's a lot of times what we're looking at right off the bat is your credit score, which is, again, kind of a tie to that character piece. How have you performed in the past? Capital is the next one. This is reflective within our applicants' balance sheets. So, have you grown your net worth position? Do you have cash in your bank accounts to show, this isn't just I dreamt up this idea last night and now I want to buy a farm. Have you been planning for this purchase? Are you willing to put some of your own skin in the game in the operation? And have you worked to build up your asset base while also reducing some of those liabilities? So capital is that piece. We like to see, rule of thumb, like 6 months cash reserves in the bank account to cover living expenses. We don't exactly want to write a loan wherein there's no emergency funds. So that's what that capital piece is relating back to. Capacity is essentially your repayment ability. So for this piece, we'll look at that balance sheet piece, specifically the liability side, to say, okay, what monthly liabilities does this person have? And then how much income do they make on a monthly basis? And we'll take those two figures and basically determine, based off of those numbers, how much more borrowing capacity do they have. A 40% debt to income ratio is kind of what we look for. For full-time farmers, that ratio varies a little bit, but that's a good benchmark for any of you listening, that most lenders are looking, I would say, for a 40% range. And that would just be monthly income divided by monthly liabilities. Collateral is the next piece. This is what we say is our secondary source of repayment. So if we haven't made it clear, Farm Credit is a cash flow lender. We need to see that there is money to repay the debt. If there's not, that is when collateral comes into play, where we would take a lien on something. God forbid, we never want to collect on that piece of collateral, but we take it as a safeguard that if something does happen, the loan doesn't get repaid, we essentially recoup our losses by selling that piece that we took a lien on. So collateral is one, and then conditions is kind of the last one. That's almost like the rules that we put on the loan, and it's going to vary for each package, but generally ones that you would probably be familiar with would be insurance requirements. So if we finance machinery, we would condition the loan to get insurance on it. If we maybe have seen repayment issues on your past credit report, we might require that we place auto draft on the loan, where payments are pulled monthly. We are sure that we are getting paid. Another one would be the condition to, oh gosh, there's lots of them, collect annual financial statements. That's our way to keep tabs on the business and make sure that even if you don't have loan requests, we still know that the business is doing well. It's in the green. There are no problems that we should be, made aware of. So those are, again, the pieces that we are looking at when we determine, is this a loan that we would like to make, or, is it something that's going to need more time on the applicant's part? So some qualities to look for in a lender. First one, if you are in agriculture, industry knowledge and local expertise. If you have a farm operation where it is not, guaranteed monthly income, you want to make sure you're working with a lender that's familiar with that and is okay. And frankly, that's what most farming operations are. It is variable. One month you may make all of your income, and the other 11 you're not really making anything. Grain farmers are the ones I'm thinking of there. So work with a lender that is aware of the industry that you're within. And then that local expertise, you want to be working with somebody that knows the insurance agents in that area that they can refer you to, knows the extension programs that are available, is just well versed in the other networks that you would benefit from. Do we have a question from Adria?
Yes. Hi.
Hi.
I heard you mentioning the things that you look for in a person being qualified, and knowing this is helpful for a person that's preparing. But I wondered if you all offer a program or know of a program that if someone kind of falls short of those requirements, is there a program to help a person get ready, kind of like what NACA does for home ownership?
Yes. So hit the nail on the head. That is exactly what Rachel does within this, our young beginning farmer relationship manager role. So, we know that a lot of times applicants aren't going to come with maybe all of these boxes checked. So Rachel and our young beginning farmer reps will work with you to, look at what you currently have, what income, debts, your business plan currently is, and kind of guide you from there of, work on these items, and then once those are resolved, come back. So her role is definitely more of a relationship building role. And I can say I was previously in it. There are times when you work with folks for multiple years on end before you ever get a loan out of it, and that's totally okay. That's what her role is for. Did you want to add anything there, Rachel?
No, I think that basically summarizes it. I would also add that sometimes when people are looking for a loan, we understand that someone might not have any credit because they're just starting out. And that's not a bad thing. Again, we would just look at all different factors. Sometimes we might have to look at different solutions or options, such as adding a cosigner who might have that credit strength. Um, that, or even a guarantor, someone who might not be looking to be on the loan, but could still, guarantee the repayments. And then maybe, if someone needs to pledge collateral, especially for a young beginning farmer, you might be limited there on some of those options. So we do try to look at all avenues possible, and also working with our key stakeholders, especially FSA, if we need to bring them to the table to help make a deal work. But like Ellie mentioned, happy to help along the journey wherever you're at, and give you some help provide those resources or give you some ideas to kind of think about, if you're looking to improve or to get better, just want that overall knowledge. That way, when the time's right, we'll be here.
Also, you all mentioned, I think you were talking about the business plan and the feasibility study when you were spoke of the SWOT analysis in terms of, is it something that a person should do? So I'm getting older and I've been thinking about farming in retirement. And so I'm years away from actually doing it, but there's a process that it's a matter of, and just thinking about, not only is it feasible financially, but is it feasible in terms of where a person might be in in the stages of their life. For example, if you are an older person and you don't have young people on the farm with you and your legs are getting old, and are you going to be able to get up before the crack of dawn to do the things that need to be done? Are you just fit for farming? And so it's something that I've been kicking around, and my daughter has been kicking around, and she's more into it than I am. So I took this particular workshop. I spoke with Ivan, and I took this particular workshop tonight with you all to hear the financial side of it on that part and what kind of support is there for that. But just hearing, what you're saying, um, I wanted to know that so I could support my daughter in doing it. But I'm wondering if there are things to support people who are really trying to make a hardline decision whether they're going to go into the endeavor or not. Is that tied into the programming that you're offering? Did that make sense?
I'd say generally yes. We look at every scenario, not there's not a one size fits approach for everything. I mean, we look at multiple factors. We go a lot, what you tell us, we will work with. We will ask those further questions, to dig deep. And just looking at the parameters to see if we offer a lot of programs. So it's hard to, maybe getting more of what you're looking to do to better see how I can help you or assist you,
Okay.
might be a good follow-up.
Okay, so that's kind of what I was listening for, because I'm like, okay, we can qualify for the financing and we get all that together, but is it something that we should be doing? I know in terms of farming and growing food and that kind of thing and feeding your family, I grew up on a farm, so I know about that part, but my daughter didn't. And if I'm approaching 60 and the bulk of the work is, just really laying it out in terms of the feasibility part. It's more than just a financial feasibility. It's the other side of it in terms of what
Yeah.
the commitment is to actually doing it. Even though you could qualify, like I could imagine, okay, if I qualify for this, and I can get qualified or be qualified, whatever the situation might be, but is it feasible to do it at a certain stage of life? And
Yeah. And I would say when someone comes to us, regardless of their age, if
mm-hmm.
they're looking to do something, and again, we are a cash flow lender, and based on the numbers, it works, then then we would approve it.
Okay, so it's not like you would look at the person and go, "Ooh, girl, you're not getting too old to do
No.
this."
But as a lender, we would typically ask, okay, you're looking to do this to start farming. Are you going to be the manager? Are you doing the day-to-day operations?
Right.
If not, who is? And are you paying that person? And then that factors into a lot of the cash flow projections.
Right, because
Now we gotta.
that's what I was gonna ask about. Like,
Yeah.
if my business plan included staffing, is that, we're saying that a portion of what we need funding for, because we got to pay people, and you know I'm too old to do, I don't drive tractors, so what am, how does this go? And that's kind of what I was looking for in terms of, what are you looking at, who's doing the farming, and is it feasible for this person to be the person that's farming? And I guess that's kind of what I'm talking about.
And I like Sheila's comment. One of her points was volunteering on a local farm. It is really helpful when folks come to us that might have not don't have any history on a farm, when they can say, like, well, I guess that would negate itself, but it's nice to have experience when you're looking to get financing for real estate purchases or any agricultural assets. That will help you determine. I think a lot of you probably know farming is a very physically uh, labor intensive job. So it helps to get the experience to say, like, is this really what I want to do? To your point, Adria, do I want to wake up at the crack of dawn every day? And is my body, can it handle it? So that's where the experience is really helpful before you get yourself into um, debt on farm financing. Like, make sure you love it first.
Mm-hmm. Mm-hmm.
Yeah, have the passion first. Agreed.
Yep. So I'll sail through the rest of these qualities. I think we got about 10 minutes here, but yeah, you probably were able to read the list. That's things to look out for as you're shopping for lenders. And then a couple of tips here. Learn is the first one. If you guys are on this webinar, you're already ahead of the game. We always encourage our applicants, partake in the learning opportunities that come your way, whether it's through CAKE or your local extension programs. Get out there, network with other farmers, learn what others are doing. That's going to be a huge advantage when it comes to differentiating your operation and growing. Not only build your balance sheet, but strengthen it. Take time to gain net worth. You don't want to just go out and get whatever you can get a loan for. Not advised on our part. Take time to pay off your debts, save up cash, build up that net worth position. Creating your business plan and flexing it as you move throughout your operation. It is a working document. So once you're done it will continue to change and evolve over time. And then keeping good records. Can't stress that enough. If you come to Farm Credit and say, here's what my operation did last year, income and expense wise, this is what I'm projecting for it to do the year ahead. Here's records that prove the income. That makes it so much easier for us, but it also shows that we're dealing with somebody that knows the financial business side of the operation. And that's a green light when it comes to looking through applications, as good records.
It's important to mention credit scores. Ellie had mentioned earlier the 5 C's of credit. And when we talk about credit scores, that's the first thing that a lender will look at. And it's really important that you try to maintain a good credit score. It's a good snapshot of your credit risk based on your credit report. I like to think of it as your report card. So this is something everyone think back to high school, middle school, whatever, or homeschool, and every quarter, every week, month, you had to take a test, a quiz, and that all factored into your overall grade. So really just thinking how important it is to maintain a good or high score. These can range from anywhere from 300 to 850. We do get it from, there's multiple credit bureaus that we can get your score from. And then, just thinking about what a credit score influences. We talked about how that is tied to your character, right? So this gives us a good snapshot of, what kind of terms are you on? Have you been able to pay your current obligations? That can all help with what's your interest rate. If you have, just to give you an example, if you started out with a 5% interest rate and now you have an 8% interest rate, yes, rates have gone up, but sometimes that interest rate can be evidence of you being a higher credit risk if the interest rate is higher. And that can just help to influence, especially when you're looking at a loan. So again, just want to give you a little brief overview of, what's in a credit score. Again, we look at the payment history. How long have you had that loan or credit card? Type it is, like I said, it could be a mortgage, a credit card, your amounts owed. So we can do a snapshot at not any point in time. It's when you do apply for credit. So that gives us a good insight into your character. And then just wanted to highlight an example of, if your credit score might not be, if it's not the best at the moment, then just an example to show you that the difference in interest rates and how much you would pay more over time if you had a higher interest rate based on not having a high credit score. So again, just wanted to provide that information, and just know that you can work. Everyone starts out somewhere, right? You might not have any credit at the moment, but you can work to build that up over time. It doesn't happen overnight. Making sure that you pay your bills on time. If you go to apply for a loan, such as a car, maybe only asking for one creditor to hit your credit and not 5, because sometimes that can, that hits a hard credit on your number. So just keep that in mind. And then with that, we just have one little last part about, it's called a loan officer for a day. So we can do a kind of a little game of, would you make that loan or not, if we have a couple minutes, or if we want to go to questions. I'll keep going. Yeah, Ellie, you're muted. There you go. Okay, so scenario number 1, would you make this loan? 21 years old, works on dad's farm, has 20,000 in savings, no debt, doesn't have a credit score, but is looking to buy a tractor. Does anyone want to provide any, I don't know,
initial thoughts?
Guesses?
Doesn't have to be yes or no.
That he will be able to get it because he has money saved up, and that he has no credit score, but this would allow the young farmer to gain credit, and now they're able to make payments towards something that's going to help them to increase their business and help them with their business and bring in asset to the business.
I like that answer.
I would say that the young farmer would need a cosigner, and maybe some income
Yeah.
verification, how much money, something to indicate how much income and what the debt to income ratio is.
Yep. Awesome. You all are great lenders. Yeah, so here's kind of, some of the points that we'd like to highlight or found. That character seems to be good. They do have, right, some capital, some skin in the game. They would be able to put some money down on it. So, hey, this is looking good. Projection, if we did put a tractor out on 5 years, this must be a used tractor. That's typically what we do for terms of repayment. If it was a new tractor, we could look at going 7 years. And then also that dad is willing to co-sign or guarantee the loan. So I think you all were in agreement that yes, we would make this loan. Any objections? Okay.
No.
Love it. All right. Last one. Would you make?
Do you want to do the next one, Rachel?
Okay. Yeah.
Sorry, I was looking at them and I was like,
all right, let's do this one. Would you make this loan? 25-year-old person who's engaged, has an off-the-farm job, only has $1,500 in savings, but has a truck loan and $2,000 in credit card debt, rents a house for $800 a month, 670 credit score. The purpose is to buy 10 acres and a home. I guess asking cost is $300,000 and then closing costs are $10,000. So I have additional information, I think. So here's some other, once you meet with the person, you find out that credit score is kind of low because of late payments. They're not able to make a down payment for purchasing the property and home. And then capacity. So it looks like they make their annual salaries $50,000 a year. And with that, here are some kind of, at the end, there's the debt service, which comes out to $2,900 a month, which is close to 70% of their overall income.
and that's the number we kind of would like to see at like 40%.
So any guesses
Well, he
or
probably, I
kind
mean,
You'd
observations?
have to have a qualified cosigner.
Okay.
you definitely have to have a co-signer, and probably, he probably definitely would have a little bit higher interest rate.
Yeah.
But you
And
probably
pay
would,
down some debt.
yeah, pay
Need to
some of
pay
the debt
some
down.
Mm-hmm.
Yeah, they need to do some more work. I have to pay
Yeah.
down debt, save. Yeah, there's a lot. And then like you said, the credit, because they have late payments, it shows a bit of risk there.
I think the decision will weigh more on the cosigner than the actual borrower.
Well, he also said that he was getting married, or she, and so there's an expense coming up there.
And then you can look at what that person who they're marrying are they going to be a part of the loan too? Like maybe that person has a better credit standing than the borrower does. And so if they're getting married, the potential spouse's credit status might be a factor in deciding if they can approve it, but maybe not until they're actually going to be on the loan. I would say just give them some prep time, and then a co-signer and pay down debt, and then evaluate the credit of the spouse.
No, I agree with that. I think we could definitely look at that person that they're planning to marry and see if that's opportunity. Because right now with the capacity, it's very tight with just the current obligations to pay the debt. Now, if this person, if the the spouse had some money to help with the down payment, that might help and change numbers. Yeah, I
Yeah.
think
The getting married and making this big step, the spouse is bringing being an asset, because you never know what job income that the spouse may have, or what benefits that the spouse may have if they're sticking their neck out there for like $300,000. Because I mean, I know this person probably already know that they won't be able to make those payments. So doing this, it brings an added, you just reevaluate the situation.
Yeah, and I think it
Oh,
would be if the lender really wants to make the loan in this situation, they'll be looking for reasons or ways to make it. But if they're in a position where it needs to be a safer investment, then I would say it would be a no until, and then wait and tell them what they need to do in order to be in a better position. It's a risk. It's a high risk loan. Even
Well,
with the cosigner, it's a high risk loan.
Mm-hmm.
and there's different scenarios. Like my situation, we just last year bought a 10-acre ranch, and um, we sold our house in town and moved out into the country. But we sold our house and we had $100,000 in equity that we put into this ranch. And but my credit was a little lower. My wife's, of course, she's awesome, was better. And so we did it through her because we were able to buy down the interest rate and also, pull it off to where now we have 10-acre ranch. I mean, the house was built in 1955, which has got a lot of history to it here in Oklahoma. But you just have to look at those scenarios. And lenders, I know you guys and stuff, you help us walk through like, okay, we need to do this, we need to do this, we need to do this. And this whole time while we were selling our house, the lender we were working with was saying, okay, but we got to get your stuff here. So you need to do this list here. And then once you complete this list, then we can complete the loan for the ranch. And we pulled it off. And if you get a good lender like you guys and stuff, like Madison can help walk you through things and stuff, then I think there, don't discourage yourself from your dreams. Just be smart about the process.
Yeah, I totally agree. Being realistic about things, about what you're asking for, knowing what you're asking for, and also like, we talked a little bit about cosigners, which can be a great advantage, but also we don't want to put a band-aid on what could be a
Right.
problem.
Right.
If he has a low credit score because of a history of delinquency, that's something that needs to be addressed with him to say, you know,
Right.
that's not how we want to be paid. We need to have, timely repayment, so we don't knock your credit score anymore, or um, if he's buying
Yeah.
a lot of toys, fancy trucks, nice equipment, everything new, it might say like it's okay if not used, doesn't need to be fresh paint on
Yeah.
everything. And so we don't want to add cosigners just to make the numbers work, because sometimes there
Right.
is a deeper problem to say we need to do a little education here and have this person kind of work this debt off or clean up that credit before we're willing to work with them.
Right.
Right.
Right here it says he has $800 a month with a truck loan. That's a high. That's a car. You know what I'm saying? That's an auto loan that reduces his qualifications for a monthly payment.
Mm-hmm.
Right, and then he has wherever he lives now, whatever his rent or mortgage is wherever he lives. This is only saying an $800 truck loan and $100 a month credit card payment. It doesn't. Where's the housing cost? He lives on the farm or he's working on the farm. You know, what are the other expenses that he has? Because okay, transportation is one, and $100 a month credit card payment, but then there are other bare necessities that he has to pay for that you have to take into consideration, and it seems like he's already overextended without listing any of that. So just on this borrower alone, if that marriage doesn't happen or he doesn't get a cosigner, a loan, he doesn't qualify for a $300,000 loan. He doesn't. He can't make the monthly payments on that because
Nope.
there's already 70% of his income is already servicing debt.
Yeah, absolutely. I mean, I like to.
Good loan officers.
Yep. You all got it. Make our job look easy. But that's something you all can be doing in the background. If it's something you want, and you think you might need a loan, well, you can add that to your current obligations and look up an amortization calculator, just an estimate to say, hey, if I did this over this time, what am I going to be paying monthly, quarterly, over the life of the loan, and add that to your current obligations and see if it's something that does cash flow and helps. Because you're right, you don't want to be stretched too thin. And us as lenders, we would make sure that would not be the case. Yeah, we want borrowers to be able to cover their debt and have money, available left over. So awesome. And then I think we just have a couple slides left. Just wanted to showcase additional resources that are available. I mentioned Farm Service Agency, USDA, Marbidco. That's if you're located in Maryland. They do offer different financing options if you're looking to purchase property or if you need specialized equipment. Again, they offer, like I said, check them out if you live in Maryland, because that is where they're based at. Natural Resource Conservation Service, Small Business Development. And then I think it's always great to work with your local extension agent. They're a wealth of knowledge and could be able to provide you information, especially if you have any questions about general agriculture. Stay connected with us. We're on all the social media platforms. And then lastly, here is our contact information if you want to get in touch with us.
Any questions?
No, thank you for your time.
Thank you guys for listening. It was great, and it's fun to have a group that engages. So thanks for participating.
Thank you. This is very informative.
Thank you.
We get to look at
Thank
the other
you.
side.
Yes, thank you very much.
Thank you. This is very good.